welcome back to the RationalInvestor.com's Weekend Frivolity, the Broiler Chicken Show.
Hello everyone, welcome back to...
Or as, oops, is YouTube working here? Isn't that interesting how when it kicks in, all of a sudden it goes circly? I get a feeling that my local internet provider is rationing.
I get a feeling that my local internet provider is
So,
rationing.
all right, good to hear that the YouTube page is working. Hello, Omar. Nice to see you over there on YouTube. No idea what the size of the audience is today, but actually, I was actually pretty pleased to see we had a bunch of people pop into the hangout, the lounge here on the site. We got about, whoop, here comes more people. We got a good, at least a dozen or two in the hangout here with me, and I see a few people over on YouTube. So I do have the OBS running. We'll just try and have some fun. Hello, Roman. Hello, B2. Keep in mind, at any given point in time, especially if I'm doing these free shows for YouTube, please consider this, what's our term that we're supposed to use for this? Edutainment. I've made it a challenge for the Hangout people here to just let me know if they happen to see anything I say here that happens to ring true to them as valuable information, because I just like to see, and what a weird video and what a weird show. The guy starts off going, I don't know what the hell I got to talk to you guys about today. I'm going to try my best. I don't know where this conversation will take us. If you have Tunjay! Hey, dude, are you still out there in Surrey? Nice to see you, bud, over on YouTube. Well, now, Tunjay, you totally made me lose track of what the hell I was saying. I actually loaded up the video going, now what the hell do I tell these good people here today? I mean, cats and dogs are living together. What do you say? Boy. So I am at a little bit of a loss here. We like to try and, if anything, I'd almost like to approach this conversation today as someone who's never really even looked at investing or at trading or anything, almost like with completely sort of blank eyes. Like, what the heck is going on? One image that I like to use, all right. I can see somebody's already giving me nods, so that's good. On the site in our education program, I make reference to, of course, a lot of the stuff that we have here in our library. But one image that I often refer back to over and over and over again is this kind of thinking, and it's tough for new people to investing to understand that really everything moves in cycles. And the problem is that we have a bunch of cycles that are all sort of coming all together all simultaneously, which unfortunately it makes for a very difficult situation. So one might argue that there is sort of an interest rate cycle, or basically the value of money. And I think it's interesting, this sort of modern day money world that we live in. I think the major reset was hit back around the time of the First World War, where prior to the First World War we lived in a very European-centered sort of universe, and through the First World War and then ultimately through the Second World War, the focus of money itself shifted to North America. And one might argue that interest rate cycle, or the cycle of money itself, is long overdue for a correction. We often on the site, and it's a bit of an accounting trick, is that we live in a world with democratically elected politicians. And these democratically elected politicians, they learned a very, very hard lesson, all of them, and especially considering that the political machine in the United States of America in particular is basically dominated by two political forces. One force is more sort of business oriented, more individual rights, smaller government. And one political party is a little bit more leftist leaning, and a little bit more towards workers' rights, and catering to the working class. And through this almost, you might even call it, benign neglect of the then politicians, democratically elected politicians, basically enjoying the fruits of the bull market, the roaring 20s, but then not coming to the economy's aid, if you will, on the subsequent bust of the 1930s. The right-wing leaning political party learned a very, very tough lesson where basically they lost all influence in the United States of America until really, you could argue, well into the next basic generational cycle. So political parties themselves learned a very nasty lesson through this period. And really, you could argue since this event, every single politician since then has basically been, the mantra is not on my watch. They will do whatever they have to do to kick the can down the road and make it somebody else's problem. Not on my watch. I will not be the next Herbert Hoover. It is interesting because, the current political structure within the United States, there is somebody at the top that could technically be Herbert Hoover. He's not really attached intimately with the Republican Party, and of course he's certainly not associated with the Democrat Party. So, we might find in history going back that maybe this guy is used as a fall guy. Neither political party will take too much damage. Obviously, the Republicans are going to take a ton of damage over this. But maybe, I've been thinking about this. Maybe historically Mr. Trump will be that fall guy that basically we can all just say, oh, it was his fault. And both political parties try and come out the other side just with a scapegoat. That definitely is a possibility in here. I've often conjectured, I thought that Mr. Trump was fairly friendly to the 1%, but I've often conjectured about whether it almost feels like they've left him out to dry here. I don't know. We'll see what happens. Only time will tell. But the general message over the past century, and this is sort of that money cycle kind of conversation, is the world basically switched to the U.S. dollar as sort of a reserve currency. And then following the Second World War, we were all sort of euchred into this U.S. dollar as, the Cold War sort of backstop, us against them. And then to the point where, and keep in mind, China has a major beef with the United States. When Roosevelt played his games back during the Great Depression with the silver price, they really screwed over a lot of Chinese. And then, of course, Tricky Dick, he came along and screwed around with this thing again in the 1970s, taking the Americans off the gold standard. And you could argue that through this period, democratically elected governments were not only sort of let off the hook as to balancing budgets, but they are actually encouraged, voodoo economics, Ronald Reagan, to actually run budget deficits. Because the West was able to outspend the Soviet Union when commodity prices completely collapsed in the latter part of the 1980s, which was actually very predictable given part of the cycle. in essence, the United States of America won the Cold War, and we live in this U.S. dollar hegemony world. I think there's a lot of people in the world that really do not like this U.S. dollar hegemony. And, if you look at an image like this, you're like, okay, well, stock market, long-term growth, everything's tickety-boo, show me a new high, I'll show you a buy, we keep growing, everything's hunky-dory. But the problem with this is that this is technically an accounting trick. This isn't actually what the growth of equity assets look like. If you actually keep these things over here that this is being measured in, if you keep these things constant, this chart does not look like this anymore. So, this sadly, one might argue, and actually I've done those kind of charts recently, and, big shout out to people on social media, on crypto Twitter and stuff, finding these studies and putting them together. But I think actually I posted out a chart. I don't know how long ago it was, so it might be tough to find it. But I did post out a chart of actually, in reality, if we actually take into the fact that the bankers are diluting the purchasing power of each dollar that we have in our pocket on a daily basis, the reality is actually this cycle actually looks very similar to sort of Great Depression cycle, which is kind of ironic, really. Again, and I try to warn people, this is an accounting trick. Here it is here. So, if we actually look at stock prices since the peak in 2000, and you take into effect all the quantitative easing and all the basically dilution of the US dollar index, which is just basically rammed down the world's throats. Actually, the stock indexes look something along these lines, which, ironically enough, is almost identical to what the Great Depression looked like, where they couldn't fuck around with these prices, right? And artificially make this look like it's making higher highs and higher lows. So somebody did ask me to sort of talk a little bit about bigger picture. So, I did want to sort of make reference to that. When I like to watch a whole bunch of intermarket analysis relationships. Here we are here. And so I keep this on my screen here all the time. So, and the sad part about it is we just don't have that much data to work with. It would be nice if this went all the way back to and actually maybe I could do this study versus the Dow. That might work. But anyway, point of the matter here is this is sort of what our current sort of situation looks like. And as you can see, in real dollar terms, we never even got anywhere close to those .com peaks. One thing I did find interesting here, and I even sort of put it out recently, is, they've gone and done another accounting trick and just diluted the shit out of the currency again. This time to the tune of something like $2 trillion. Probably more importantly, in sort of thinking about what does this world look like, we live in a world of debt. That is basically, I was surprised when I pulled up. Somebody was just mentioning Apple Computer is actually trading at less than debt to equity. I mean, this shocked me. I mean, this company is earning money hand over fist, huge amounts of money. What business in the world are they doing racking up debt here? This doesn't make any sense to me at all. Why would they do this? So you could actually make the argument that if push comes to shove, there's more debt on the books at Apple than there is equity. This company, if they don't earn any more money, it's worthless. They've got more debt on the books than they have equity. I found that shocking. I didn't even realize that for the longest time. That really surprised me. And I think I remember over the past 6-8 months hearing about Apple really stepping up debt equity issuance, which really surprised me. That for this company, for the longest time, we used to look at this as just stunning value. Look at it, it's now trading 12 times book. What the fuck? And of course, Zach and I, we run a nice little conservative stock screening model. There's no way in hell this would pass our screens. We're not allowed to invest in companies that are greater than 0.5 book price to book. So that shocked me. That really did shock me. I was really surprised at that. That snuck up on me there. So, I don't know whether they can keep playing this Fugazi. I thought it was interesting that basically through the 2008 financial asset crisis, basically the credit market seized up. And that's what sort of caused all the wheels to fall off the bus, is that nobody was lending any more money out. And now I'm finding, big blue chip stocks like Apple. Why on earth did they go and load up on debt? Remember, a lot of the sort of scuttlebutt recently was why should we be bailing out Boeing if they're earning tons and tons of money from guaranteed government contracts, and yet they're racking up more debt? Why are they doing that? It doesn't make any sense. So, if you, and, this is where it comes back to this hard money, soft money world. And the irony of it all is Bitcoiners and stuff, how do we say this? Your beef with the system is nothing new at all. You could argue that, this conversation actually started, they used to call them new dealers. I was watching a really cool video over the weekend about U.S. politics back in the 1930s and 40s. And, the people that talked about socialized losses, collectivization, stuff like that. In fact, actually, I think Olga put out a tweet, W.D. Gann, and he made reference to the new dealers. And of course, he was a guy from basically a century ago. So the irony of it all is that, people that are Bitcoin maximalists and, store of value and all that, your conversation isn't new. When I was growing up and, through the 1980s fear cycle peak, they called them the hard money people. Where, Tricky Dick took the Americans off the gold standard and they were all claiming, hey, get back on the gold standard. We want hard money. We want currency that we can believe in. Through the week, I've been having interesting debates with people, probably mostly myself, because I'm such a weirdo. But I've been having debates with people about what does our society look like going forward? As long as you do understand that this is a Fugazi, we live in a world of accounting tricks. You're going to see the headline number like I had sort of shown you before, but I don't know what I did with the chart. I guess that's over here. Right, you're going to see the headline number. They're going to print the stock market higher. But the question ultimately is really, is the stock market actually higher, or is this just bumping along in this trading range and playing with the numbers to make the public think that it's higher? Interestingly enough, if you actually look at this chart, what I actually see is I see the potential for a nice head and shoulders. So I guess the way I look at this right now is, ironically enough, in my education programs, this is sort of going back to those sort of cycle kind of talks. I like the idea that our society moves through these 35-year demographic cycles, and just think of a typical generation going through their life cycle. What are they spending money on? What do they do? And usually two of these demographic cycles makes up one larger interest rate cycle, sort of the value of money. Once we get through two of these demographic cycles, then the people that were in the last interest rate cycle crisis, i.e. the value of money crisis, they're usually dead, right? So the people that are going through the current one, they have no memory of what bad actually can look like. And that's why we have to keep doing these cycles over and over. It's because we as humans, there's James Clavell wrote a bunch of books that I really like. One of the famous lines from his book Taipan was, times may change, people never do. And it turns out that we're actually very similar to the way that we behave, the social interactions that we have to people that lived like thousands of years ago. Really, we haven't changed a hell of a lot. It's just we just don't learn from history. And what they say, you don't learn from history, you're doomed to repeat it. So anyway, point of the matter here is as we move through these 35-year demographic cycles, we have to understand the spending behaviors and habits of which part of the cycle is sort of in charge. I still, to a certain degree, believe that the baby boomers are still driving the bus. They're getting older, though. Like I just had my mother on the telephone there. That's why we started the show a little later here today. And she's getting up there. And she lives with her brother and her brother's wife. And, basically they're all up in that sort of, senior category. So I worry about them immensely. The problem here, though, is that there are a shitload of them. On a side note, just to put COVID into perspective, the Germans ran some studies, and they figured if COVID this one German doctor I watched an interesting interview with, he simply said if the worst sort of scenario of cases of this COVID hit, then the statistics are probably about somewhere around 30 deaths a day. But then he said in the same breath, you have to understand that within Germany, because there are so many older senior citizens, that on any given day, they expect somewhere around 20 citizens to die. And while they may not be directly related to COVID, quite often he said that you can find some sort of flu symptoms, especially around this time of year through the winter, that are related to their deaths. So we have a hell of a lot of baby boomers overhanging us. And then, of course, we live in democratically elected societies. Do the people that were elected by them last election, do they want to keep their jobs? We do know that, the U.S. House of Representatives, for example, its elections are every 2 years. So these people have to constantly go back to their electorate and ask, can I have my job back? And you see how the power shifts back and forth in the states. But in essence, those baby boomers, there's a shitload of them. They have a whole bunch of Social Security, Medicare, whatever entitlements that they don't want to go anywhere. Will they handle something like collectivized losses where the purchasing power of the currency is slightly diminished to just keep the game going again? And who votes, right? Senior citizens always vote in record numbers. So my hunch is that, and the irony of it all is that we actually have a role model to follow. And that's basically Japan. What has been Japan's fate over the past 10, 20 years? And I think I basically had conversations along these lines through the past week with people about Japanification. It feels like we're heading in that direction. And the irony of it all, and I even saw some people commenting that the United States of America has collectively decided here recently now they are in favor of bigger government, not smaller government. Basically, that's what this $2 trillion package is all about. So, let's talk economics just for a moment. And TRI, we like to follow. This was a study put together by one of our OGers, Jamie. And I think I saw Jamie's putting out, is he putting out tweets and stuff about my funny expressions? The Rational Investor, a playlist by Jamie King. I'm almost afraid to see what that is, Shirk Toshi. Anyway, Jamie comes on the site, great gentleman out of the UK. And he's a really big fan of top-down fundamental analysis. And here's a really good example of top-down fundamental analysis looking at employment data in the jobs market and the correlation between number of people demanding unemployment and, well, not demanding, asking for help because they don't have a job, and the performance of the stock market. And hopefully you see, basically when this moving average, i.e. jobless claims, start ramping up, stock market's not happy. When jobless claims start to top out, stock market gets a lot happier. So you can see clearly we just had a pivot. And the numbers here, I mean, this is, sometimes you get like moving average checks and you think it's a bit of a head fake. Well, this print here is 3.1 million. So this indicator, when I loaded it up here after the print of 3.1 million, it just went absolutely apeshit up. And you can see there is the data print. You know, through the past 50 years, we have not seen this kind of economic situation. So at the very least, I think we have to expect recession. At the very least, right? Remember, that's 2 quarters of negative GDP growth. That could be 2 quarters of minus 0.01 GDP growth. That defines recession. I've heard some analysts and some brokerage houses calling out saying that they expect 20 to 30% GDP contraction in the next data print. How many quarters of minus 0.1 GDP growth do you have to get to have minus 30% GDP growth? I mean, Jesus, you could at minus 0.1%, you could be there a decade and not get to that kind of number. So the point of the matter here is that we have to expect that the economy has broken. Now, having said that, again, if we think back to our cycles, none of us should have been surprised that the economy has finally broken here. Now, a lot of people talked about this recent economic expansion was the longest in Western history. Well, that's done. Put a fork in that one. You know, that's these economic cycles. They basically go about every 10 years. And you can almost sit and watch this. And I want to see people. There's 48 of you watching on 50 now watching on YouTube. Please put a +1 if you've ever heard me say the expression before. Recessions usually happen in years that end in 8s, 9s, 0s, 1s, and 2s. It's good to see you guys in the hangout. But I want to see you YouTubers. I mean, you people in the public. Are you learning anything from this? Thank you, James. Thank you, B2. Thank you, Tunjay. So none of us here at TRI, only 4 people? Seriously? All of you? Only 4 of you? There's M Crypto M. Hello, M Crypto M. Have you ever heard me say the expression, recessions usually happen in years that end in 8s, 9s, 0s, 1s, and 2s? Set your watch to it. I mean, it's just basic. You've never heard me say that? Oh, that's sunny. I mean, seriously, we should have +1s from all 50 of you. Anyway, we won't go there. And oh, by the way, can we all please ring Colleen's bell in unison here? Thank you, Cheryl. Now please ring Colleen's bell. Love you, babe. I love Colleen because Colleen, to me, she represents. Ironically enough, you know what, Colleen? Colleen, you actually represent the future. You don't even realize it. You probably think you represent the past, but you actually represent the future. Because Colleen is someone who came to us, referred to somebody else. She didn't know who the hell, this TRI guy was. And I think we've made a materially positive difference in her world. And it doesn't really matter what age. Yeah, I'm sorry, dear. I can't read you while I'm talking here. I'm trying to give you this most beautiful soliloquy here. Ode to Colleen. Oh, Colleen, sitting there in your USA, what do we do to make your day? All right, blah, blah, blah. Anyway, point of the matter here is, oh yeah, we don't want to talk that. Point is that I think we got the message through to her. And if we can get the message through to her and her husband, I think we can teach anybody. But the problem here, of course, is it takes a lot of work. You really want to learn how to do this? It takes a lot of work. And how long have I been making reference to Colleen? It's kind of funny. And years gone by, we had one gentleman who was out of Germany. I used him as my sort of model for quite a long time. Then, of course, everybody remembers Da Vinci. He was a fun model to use. So it seems like every year or two I have a new fun person that I like to use as sort of my guinea pig. And I think Colleen is a perfect example of how anybody can learn this. Your station in life is irrelevant. Doesn't matter. Really, the only thing that matters is your thirst for knowledge and your desire. And she's been coming back day in, day out. She's like, I'm going to get my goddamn money's worth if I have to grill him 24/7. And that's fine by me. It's exactly what I want. And I think, like I said, we've made a material difference. And I see the work that she's doing on the site. Like I watch all of my students, watch you like hawks. And I see the progress that she's making. So it just goes to show anybody can do this. So. Yeah, Dav's a character, eh? Devos! Oh, speaking of which, here's another one of my dears, Andrea from Italy. Andrea, man, she's reporting right from the trenches. Hi, caramba. Hang in there, dear. My best wishes. So, okay, back to our story. So, really, it shouldn't surprise us. We've got demographic cycles, we've got interest rate cycles, we've got economic cycles. You could even argue the business cycle was getting a little bit old in the tooth there. Usually, think 4-year U.S. presidential cycle. Usually they say buy the market in the first or second year of the guy's presidency and sell in the last year of his presidency. So, ironically enough, you could actually tie the business cycle with the Trump cycle. And it's interesting too when you look at the stock market and Mr. Trump, they've actually only now, and that's sort of the irony, the big picture of this is you think, oh my God, stock market's crashing, blah 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 blah. Okay, Sammy, I'll try. But ironically enough, the stock market really is only now just come back to levels at which he was actually elected. So the irony of it all is all we've done is we've just, and what's interesting is if you look at the S&P 500 futures, the market gapped higher, and we always say that gaps, especially on futures contracts, they don't like to be left open. And interestingly enough, if we go back to, let's just put a marker on it. If we go back to his election, which was right in here, right, that big crazy candle there. If we go back to the daily charts, what you actually see is, I think, might have to drill down a lower time frame. Nope, there it is. Yeah. So you can see that this was problematic for the stock market anyway. Maybe excuse me. Maybe what can I get of value out of this guy's rant here today? If you ever see a price chart that looks like that, especially on something like a big stock index, S&P 500, and it's got this big hole on the charts here, at some point the market is going to want to, in fact, not even want, it needs to come back and fill this hole in. So I might make the argument that as long as he didn't upset the apple cart and everybody sort of played the game correctly, the economy kept growing, right? And okay, Mr. Trump and his interesting management style as long as the public bought the punch, we could keep moving this thing up. But interesting now how just right at that apex fear moment there, we're just now coming back down into these original election levels. And I hate to say it, guys, but my hunch is that that's actually right here. And then also, too, what concerns me is these gaps. You notice there's this gap right here. This is basically when the stock market last put in the most significant, what I would call a significant actually pivot. And I remember specifically when this happened, when we were running the site, we had all of our internal indicators, everything just went all apeshit bullish on this event here. So I do believe that this is sort of our last sort of stock market bottom, if you think sort of like horizontal support and resistance, that kind of conversation. Of course, and here's something maybe you might want to think of as value. About what percentage of the time do these gaps actually like to be filled in? Anybody know? Colleen, you're so smart. Let's see if these YouTubers have any idea. Boo. I don't know how to pronounce your name. Boo hoo hoo 007. Oh yeah, look at that. Oh no, Omar. Read the people above. You'd be surprised. These gaps, they do not like to be left open, especially on something like the S&P 500 futures. That's just too big. So, the irony of it all is if you are a gap kind of guy, there is that Trump election. If you're a gap kind of guy or a gap kind of girl, you actually just look at this chart and you go, well, you know what? I can tell you exactly where I want to buy. And actually, this has been kind of a fun expression that I've been using for the YouTube audience. What do we call all of these kind of levels down here? Our level 2 education program, there's a very specific name we give this. Horizontal support and resistance. But what would we call these, you YouTubers, all you coattail riders? That's right, Andre. Andre, thank you, man. He's getting value out of these free videos. That's good. So if you just think about this in serious terms, you can sort of see where the next sort of floor is in prices. And the cool part about it is, there's no difference between this and crypto and stuff and Bitcoin, bonds, gold. Somebody at some point in the past went, no more down, you go up. No, I said you go up. I said you go up, damn it. So you can see somebody's got their bacon on the line off at these levels. But look where we are here. Hey. I mean, we could go anywhere. What's also quite shocking, too, is if you go boom, boom. So you may have heard me talk about megaphones in the past, but that's basically what this sort of is. What's fascinating is how the market just blew right through the top of this up here. And look at what's really cool is check out how the market blew through the top, checked it, kept going up, then bang, on one day, came right back to that gap lower, then came back up and said, no, I'm still at, no, fuck you. Down you go. So clearly this was a pretty big battle line in the market there about, I guess what's that, about 2 or 3 weeks ago. And hats off to guys, a bunch of, what's so funny is like through this period here, I was like, okay, total stock market top, stock, buy your Canadian bank stock puts. I mean, fuck, I went on and on and on. Okay, recession's happening. Then this happened, and I was sitting there going, oh, fuck, did I get this completely wrong? I liquidated my put options. Can you believe that? Hey, caramba. I had a whole bunch of capital gains here, so I needed to come up with some capital losses to offset those gains. But fuck me. And if anything, this is a great analogy. And here's something. If you don't get value out of this statement, then really there's no point in you watching this channel. But trust me on this one. If you ever make a decision in the market based on tax reasons, 99 times out of 99, it's usually the wrong decision. And there, I mean, I literally sold my puts right here, right into the end of the year to claim the capital loss. Look what happened. What a doofus. Oh, fuck me. But, one good thing, and this is why I like the education program and us thinking similarly, is we actually did have some people who were short off the top and made some half decent money. And we did have, Ryan, total rock star. He fucking rode his puts all the way down. Woohoo! So it pleases me immensely to see that that there are people that took this information and used it appropriately. Joshua, I think you did really well on some puts too, didn't you? I seem to recall you were talking about that. Not bad. That's what I love about TRI people too, is they really get this, just be humble. If you made a whole shitload of money in the market, your job is not to go out and rub it in other people's faces. That you do that, you are just asking for trouble. And I have seen some people on social media kind of doing the I told you so kind of angle, and I'll tell you, that's really bad karma, and especially in down markets, when you start talking about the fact that you were short, or you are still short, or you are still shorting, you can get yourself into really, really hot water with people. And then what's really weird is you actually at the bottom, here's people start saying, well, it's un-American to be short, and we should burn him at the stake. That's against capitalist principles. What? People will grasp at straws for anything, any way to sort of make them feel better that, hey, at least we got this guy kind of thing in this kind of market. So if you did make a bunch of money on the short side, be humble about it. I totally respect Joshua, Ryan, these people. They're not flaunting it in people's faces. That's a sign of not only a good trader, but also a really good person, too. So hopefully there's a nice little karmic message for you out of all this. Oh, goodness. I can't even remember. What were we talking about? I don't know. Looking at price action itself on the stock markets, usually I like to talk about crypto through this, but ironically enough, it's probably a good idea just to finish off this sort of stock market talk, and then we'll head over to crypto if there's any time. Also too, I think it's important to understand, well, that's good, Crypto M. I like to hear that. Crypto M says, I trade now for 7 years and always are looking to your videos. You learn me a lot to be a good trader. All right. Good to hear. When you look at a stock market chart like this, the first thing that jumps out at me is, of course, our conversation about gaps that we just had there a moment ago about the ES. And, of course, hello, there's a gap down there. So my hunch is at some point down the road, we will have to come down and revisit this level. But also, too, you probably look at this and go, well, Brian, isn't this a gap up here? Isn't this a gap up here? And ironically enough, I think the market's probably going to work its way right back up and fill these gaps in as well. The question ultimately in the short term is, have we sort of stopped the initial sort of hemorrhaging? Right? If anything, the market breaks. Think of it as a car accident. The very first thing you do, I think, and I took St. John's ambulance and stuff like that, is you just want to sort of address the immediate concerns. Oh my God, there's blood gushing out of this vein. How do we stop that? Or at least slow it down? So, I think you could argue government stimulus, the rush to get all this through. And frankly speaking, I was pretty impressed that the politicians in the Congress actually played ball as fast as they did. And ironically enough, the only guy who wanted to actually derail it was a Republican. and and oh my goodness, they just tore him apart. And of course, Donald, he threw in his 2 cents. A libertarian, and actually, how ironic. The ultimate libertarian to sort of try and, audit the Fed, keep everybody responsible. He actually was diagnosed with COVID just a week or two ago and sent home and put in isolation. How convenient. I'm sure he would have said something. But this younger junior libertarian who says, wait a minute, isn't this killing the value of the... Shut up! Goldman Sachs wants their cut, so be quiet. Yeah, how convenient. Yeah, well. And, with everybody in this, I mean, the tragedy of this is that people are dying. This is serious shit, right? It's one thing when it's happening on the other side of the world. One thing I will say that really actually scares me quite a bit is, and I have heard this. It's not just Brian's rant, but I have heard this from 3 or 4 different of these sources. And keep in mind, at TRI, I constantly have an open mind. I am looking always for information. I don't really care where it comes from. I think I told you when I was a broker, if my client called me up and said, whenever my dog food lands on the left side of the bowl, when I throw it down for him to eat, I buy, and if it lands on the right side, I sell, and it works more than 70% of the time, great. I'm asking what side of the bowl Rover's food fell on. All I care is just show me something that works, something that can help me, that we can do more of this that works and less of shit that doesn't work. So, no doubt about it. You've heard me rant about this quite a bit. The way I look at it is 9 times out of 10, celestial events don't really have that huge of a significance on the human condition. And we are sort of mid-cycle, and these cycles can sometimes last 30, 40, 50, hundreds of years, whatever. And so when you're right in the middle of the cycle, you don't really see the forest through the trees. The problem is that 2020 sees a bunch of these cycles, like about, I heard one lady say, like 5 different ones, all happen to coincide with this one particular year, which she said was, this is a once in a million event. You just don't see this happen. So given that, I do respect that there are forces at work in this universe that us silly little humans, we can't really comprehend. Our sensors, the way that they've been built, they don't even we don't even have the tools to be able to measure half of this stuff. So how do you prove or disprove that there's an effect? The way that I like to see is I just like to see, well, what happens to price in the marketplace. And I got to tell you, man, these Jupiter, Saturn, Pluto conjuncts, this is some screwy ass shit. I will warn people that what I've been hearing from a lot of these people is that March 31st, and I think Olga put out another tweet here today. I saw people in the lounge passing it around. So from her perspective, she's worried about the end of the month. I watched another gentleman today talk about how this sort of the apex of the storm here is this Tuesday, Wednesday pivot right here. I do know for me, my studies this weekend here is a big Pluto, Saturn, Jupiter conjunct date I've been following. I am hearing a lot of people, we were sort of conjecturing that once we get into sort of early April, things should calm down a little bit. But I'm actually hearing a lot of people say that, governments around the world are basically shutting down right through April and then I heard one gentleman recently say that we don't really see a clear sailing here until we get well into May. So, this is the crazy reality that we're living in. I find it fascinating that, they do say that it's things like, Pluto, Saturn is, sort of authority, and then being Saturn and the system, and then Pluto being the destroyer. You can definitely see that the world that we lived in the 20th century is being destroyed. And we are going to come out the other side in this 21st century looking very different. As I said, there are reports now that basically the public consensus is within the U.S. sort of hierarchy that the United States of America is embracing the idea of big government, which they've fought vehemently for a very long time. Interestingly enough, with the aging baby boomer population, I get the impression that sort of these viruses and this sort of theme, this reminds me a lot of 9/11, and actually not really. This reminds me a lot of 1980, the last fear cycle apex, and that crisis went on for 444 days. And it marked the transition from sort of the greatest generation into the baby boomers generation. I believe that this event here is that catalyst, that transition event from one generation to the next. And sadly, what I think ends up happening here is now for the next 10, 15 years, just as after 9/11, basically the policy for the next 10, 15 years was all the war on terror. I found it fascinating that there was a political figure in Africa recently who said he was a victim of the war on terror, and people were like, so what? Who cares? I mean, it got literally no press at all. Nobody gives a shit about the war on terror anymore. Now it's all war on viruses, war on healthcare. And I have a feeling that's basically our theme for probably the next 10, 15 years. Which is interesting because, we have conjectured on the site, how are we going to set ourselves up for the next growth cycle? Well, clearly, all these biotech companies and, diagnostic companies, hell, maybe even investing in respirators, building companies, they are definitely going to be at the markets for obviously companies that are working on things like pneumonia servicing, because I think that's actually what's killing a lot of people in this cycle. Those kind of companies, they're going to be in the for the drug makers. Of course, they will be sort of the drivers of this next growth cycle. I can see all the pieces being put in place. But first, of course, we have to get beyond, like I had sort of started off this conversation, are we still in sort of hemorrhaging mode? The easiest sort of tell of that I've found in my career is to use this 38.2 fib level. Look at that. That's ridiculous. I totally didn't pre-plan that. I totally didn't. I swear. So, I was taught this tool, and it's a simple tool. And if we roll over and we make new lows, then you're just going to simply keep adjusting that 38.2 level wherever the ultimate low is. This is sort of the dead cat bouncinator, right? That's what usually happens. Yeah, I suppose Murat, and that's something that Shane's talked about. We could talk about last cycle was theoretically the earth signs, and now we're moving, this cycle is into the air signs. So I love those kind of things like internet, right? That is a very airy kind of concept. So yeah, I love that kind of thinking, Murat. Okay, back to our conversation. We're still asking whether we're hemorrhaging here, Murat. Before we can get into what does the next cycle look like, let's just make sure we're the patient's still alive here. So dead cat bounce, 38.2s. That's pretty normal. What we probably want to do now is look at this range and ask what's a 38.2 going the other direction. So something like that. So my hunch is just over the short term, this is our playground. And, we used to do this all the time in crypto. I mean, it doesn't really matter what asset, but we would sit there in the lounge and go, okay, it looks like we've got 38.2 RL, or in this case, we used to like to call it Ray's barbecue level. I don't think that does Ray, Mr. Burchett, any service. But nonetheless, point here is, if you want sort of a guide as to what's going to come next in the stock market, you're probably best to just keep an eye on these 38.2s. This move, this dead cat bounce off of the bottom, clearly ran into some traffic up there against 38.2. My hunch is probably going to see some play against these lows, right? Against, think na levels all in the short term. Problem here, though, is given the fact this is 38.2 and this was a V bottom, we could start drawing trend lines off of the bottom. If we start losing those trend lines, then the pressure to the downside still reverts, because remember, that was a V bottom. So I think, if anything, now we have to probably think about tests of these lows. But first, we got to wait for 38.2 to resolve. It's probably... My hunch is it probably does something, it ultimately looks something like that, right? Nice head and shoulders, test of these lows, that low, that low, that low kind of thing, right? So that would be my hunch here. And now, interestingly enough, now that the politicians have actually shot their wad, now actually the Washington can't come back to the rescue of the market for the time being. So the market might be in a bit of a drift, right? Well, you might argue this was buy the rumor. Now this is sell the news. So let's, if you're watching the stock market and you're watching the major markets, let's keep an eye on how this develops. And of course, I think I do this a lot in the sort of free videos, Monday to Friday. Whoops. If I did want to be a buyer, same thing on Bitcoin. I probably want to wait for some sort of test of the reload zone. Notice, hello. Remember that was I think that was a gap off of the higher time frame charts. Notice, gee whiz, there's a gap right there. That actually might even be that gap reference right there. So you see that there's actually a cheeky little gap right down at the bottom there. So if I was gonna really get all super excited about the long sides, probably I'd want to see just sort of like a nice little W through here. Right? So that's sort of, and keep in mind, we're in a very freaked out market state right now. If the stock market is feeling heavy, what do you think the odds are that good old Bitcoin is going to feel heavy too? I think probably pretty good. And interestingly enough, if we pull up the Bitcoin chart off, say, 4 hour, it actually looks extremely similar to this. So if we go BTC USD, and we go, let's do Stamperoonie. Gee whiz, there's that same pattern. So rallied up. The problem, of course, with Bitcoin is now actually this does have a double top working here. Which I suppose isn't a bad segue. Why don't we pop on over to crypto now? Talked enough about stock markets, blah, blah, blah. Hey, there's Shane. Actually, speaking of Shane, crypto, I put out a cool tweet this morning here. The problem with the stock market is that, and I showed you guys earlier about what was that? That was Apple. Is now Apple actually is carrying more debt than what is actual equity in the company, which I found shocking. That's a bad, bad sign. You don't want to see... Growth companies should not be carrying debt. That's just not a good sign at all. So, if you can't go to the stock market and have some sort of comfort that the fact that these companies actually are worth something, where do you go? Problem here, of course, is that the public always comes late to the party. So... you could do cost of production studies through here. And, I had an interesting, you can see this tweet's gotten a bit of traction here this morning. But I had an interesting conversation on Twitter with an old site member, right? And he was mining Bitcoins back when they were $200-$300, and that was the cost of production. And he felt like he was getting pretty good value for his mining efforts. which I thought was, that made sense. Suppose we'd all love to hit the Wayback Machine and get some machines up and running and mining the old coins back when that price was up, eh? But anyway, point of the matter here is, and I just said hi, Shane. Speaking of which, Shane just joined us. Shane actually wrote this script over on TradingView to try and help us see what different mining equipment, if you plug in different variables, what that mining equipment would produce as sort of a cost of production kind of thinking. And, the point here is that, I could go buy a share of Apple, but technically if Apple doesn't earn any more money, people stop buying Apple iPhones. And the company goes into receivership, I don't get anything. I pay $200-$300 a share for the stock. I don't get anything. There is no value there. There's more debt than there is equity. Now, the premise is that they've got enough cash and they've got enough earnings power to service that debt. But at the end of the day, we have to understand that they're carrying more debt than what is actually on the balance sheet in form of assets, which really bothers me immensely. I do not like investing in growth assets, which equities technically are, that don't have any equity in them. That's bad. So this is where people come to if they're thinking about investing in assets that actually have some value. They come to the commodities market. Because keep in mind, very few stocks actually have any intrinsic value, especially ones that carry debt. I mean, technically there is no value to them. It's this fugazi. Hey, we'll keep earning more money. And as it's a Ponzi, as long as we keep earning more money, the stock price will keep going up. And the premise is, as long as we keep growing earnings, the stock price will keep going up. If those earnings come into question, like 30% GDP cut in one quarter, kaboom! What do you think is going to happen to those stock prices? And I couldn't believe it. Apple right now is even trading like 12, 13 times book value. Holy shit. I don't know whether I really want to be taking those kind of risks in this kind of environment. So it should make sense in this kind of environment that something like a commodity where we can actually see some sort of intrinsic value, i.e. what does it actually take to dig the commodity out of the ground? What does it take to actually grow the commodity? This actually represents sort of like, okay, well, if I do have to have my money at work in the marketplace, at least I'll have it here where I know that there's at least some value. The only problem, of course, is that here's price here, and according to the S17, this is what their cost of production is now. So even now, and this is what I worry about with gold investors, they pay $1,600, $1,700, $1,800 an ounce for gold, but they have to understand that, the industry average right now for cost to mine an ounce of gold is about $900 to $1,000. So you're going to pay a bit of a premium, no doubt about it. What I find interesting about Bitcoin, though, is, of course, we have this halvening event coming up. What does that do to this S17 miner on the other side of the halvening event? If I understand correctly, it will bring this number up into where basically we are right now. So this is sort of one of the features that I think Satoshi built into Bitcoin to give it that sort of, we can offset the dilution of the US dollar because it seems to be being diluted on a fairly consistent basis. It's almost like the dilution of the dollar, Satoshi sort of figured out what that exponential growth curve was, and he basically put in the Bitcoin algorithm once every 2 years, which is probably that exponential growth of US dollar dilution, he put into the code that basically Bitcoin will half at almost exactly the same rate. It'll be interesting to see because technically, according to Moore's law, what is the doubling rate? Isn't it like 18 months? I think it's something along 18 months. So I don't know whether Satoshi has caught up. Now, there's also another variable in this, and that is, from what I understand, Samsung is getting into the crypto miner business. And they've got the S20 now that's coming down the pike that's supposed to be able to mine 5 million Bitcoins in 10 minutes and butter your toast too. So I'm super duper looking forward to that. Hey, Shane, have you heard about this S20? I think I saw Shane here. Hey, there he is. Shane, are you there? He probably doesn't have a microphone. But anyway. Not as of Kate. All right. Is Kate your contact in crypto land? Just kidding. Okay, so anyway, wanted to try and talk a little bit about, ironically enough, in times like this, people are going to go into value if they are going to invest in anything at all. I'd be very, very careful about investing in companies that are carrying a lot of debt, because I actually believe that this is the first salvo of 2020's crisis. And it's not the worst one. The really ugly one actually comes in November. And what I'm also worried too is that, if I understand correctly, yeah, I'm not quite sure which direction that's going to send cost of production. I would imagine, though, that the chips that they're going to bring in are going to be more efficient. Standy Paliche, I don't know whether I'm butchering your name, sir, or not. Anyway, says, big boys like Samsung coming into mining, will that not impact cost to mine upward? I would have actually thought, yeah. See, I would have thought they would bring sort of things like economies of scale to production. That should bring the cost of the rigs themselves down. But I'm not quite sure if you can actually change sort of the Moore's law, sort of logarithmic growth of the mining efficiency. I got a funny feeling it's on some sort of exponential growth curve, and that's just the way it is. So, anyway, back to our story. I actually really like, somebody on the TRI site today posted a video by, and I make reference to this gentleman every once in a while. I think he does very good work, and he does it from a purely mathematical perspective. So, and I'm always looking in the crypto space for more people who have sort of hard data and stuff that they use to justify certain price action. And we were sharing early in this morning. I'm just trying to find it here for you guys. We were sharing earlier this morning. I think his name is Benjamin. I've made reference to him a couple times while watching. While doing these free videos. This gentleman right here.
Hey everyone, thanks for jumping back into.
I know, you're awesome, dude. Hopefully YouTube doesn't shit on me for having those few seconds that you talked there. Please forgive me if this is copyright infringement. But I think his name's Benjamin Cohen. I think he's a pretty knowledgeable gentleman. And I actually like his thinking in that he believes that the cycles are being stretched out over time. That, well, it's not probably a hard and fast 4-year cycle, but it's probably more that as Bitcoin ages, and I do believe that the influence of the miners will sort of diminish over time. I do like the thinking that these cycles are actually aging a little bit. I'll leave that kind of conversation and stuff to him. What I do like, though, is I think on balance he's basically saying, look, if you are thinking about investing in crypto and Bitcoin, probably in particular for him, I don't know whether he likes altcoins or not, really you should probably be thinking like 2021, 2022, 2023. And frankly speaking, that rings very, very true to me. So and basically his attitudes, and I'll just leave it at that. Go, I can always just throw this on the YouTube. Somebody wants to put that in the comments or something, feel free to watch. But his attitude, and I love this attitude, is that, do you think the public is even the slightest bit interested in crypto right now? Probably not. The irony of it all is people, like everybody who's watching these videos right now, and especially, site members and stuff, you have to understand, guys, we're not the public. We're the fanatics, right? When the public comes in, that's all that Steven Seagal, remember that guy? Oh my goodness. Floyd Mayweather, remember that guy? Bitcoin billionaire, all that kind of crap, that's the public coming in right now. You people, actually, if you're still interested in Bitcoin, you're still interested in crypto, you're not the public, you're the diehards. And his basic attitude is, take the next year or so, as I tried to point out there, I actually can make the argument that this is actually a relatively safe place to run and hide. I know I'm going to get a lot of shit on fucking crypto Twitter for that kind of statement. If you can get in near the cost of production. I love the idea, and I say it repeatedly on the site, throw in some stink bids down here, a couple grand, 3,000, whatever. If they really want to fuck the market over, take advantage of that, because that on the other side of May, this number is going to have to start ratcheting higher here. And the good part about this is, at the end of the day, because keep in mind, like in the stock market, what usually kills people is, Nortel was the best example. $125 a share on the Canadian stock market represented 35% of the Canadian stock market. 35%. One company. They didn't earn a penny a share. And if you looked at their balance sheet, they had no cash on the books. And the only way they could justify was that they kept growing. They kept growing. And they called it EBITDA, right? So their EBITDA, earnings before interest, taxation, depreciation, amortization, right? So in essence, we're going and borrowing money to fund this growth. Don't mind the interest payments that we have to make. Yeah, I know they look ugly. Yeah, I know we're carrying a bit of debt, but don't mind them, because we keep growing. We keep growing. It's the same damn story. Nothing's changed. And, when the market breaks and prices start to collapse, people look at the balance sheet and they go, well, you mean this company never earned any money? This company is trading way above book value? This company was trading at like 10, 20, 30 times book value? At a price earnings multiple, if they even did earn any money, maybe in the hundreds. Staggeringly high historical valuations. And then the stock prices come collapsing down, and people are like, well, gee whiz, why did that happen? Well, it's because these assets were ridiculously overly inflated. The message I'm trying to say to you here is that if you can find assets that are at least trading, especially a commodity, trading at the cost of production, well, the fluff has already been taken out. This was the fluff when we were a million miles away. Now, keep in mind, this is a new hardware, so it's not the same, blah, 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 blah. But this is the fluff where the public gets fucked, right? And, of course, this is exactly Floyd Mayweather or Steven Seagal, all that kind of... This is when people were in the market. So, I like the thinking. The world is in a bit of trouble here for the capitalists. This is going to be a tough slog for the next few years. Make no mistake about it. We are probably going to see institutions nationalized. We are going to see our freedom of movement and expression dramatically reined in and curtailed. We may see war before the end of this year. And I'm seeing a tone that scares me a little bit. All of the pieces, in my opinion, and it'd be a fun prediction. Let's see what happens. I could very easily see the West justify going to war with China before this year is out. Oh boy, yuck. We'll see what happens. Only time will tell. So, if you are going, if you are going to be putting your money at risk, really, really try and hunt value over the next year or two. I love the idea of putting yourself on a dollar cost averaging plan. I'm just going to slowly accumulate Bitcoins in here. If I can get them at or below cost of production, it means they're going on sale. And I'm going to be buying when others are crying and selling when others are yelling. Love that approach. I don't mind it so much on other altcoins, but you just have to be very careful in understanding what cost of production is and value in your name. I put out tweets to the effect recently on things like Ethereum. If I understand correctly, currently the cost of production for Ethereum is about $150. And to me, of course, if Ethereum was going to stay POW and continue its thing, to me, that would have been an absolute no-brainer. The issue with something like Ethereum, of course, is it has to make a transition from POW to POS. And lots of people on crypto Twitter reminded me of that. I've heard other people say that, hey, if you can get it like a good 30, 40 Ethereums in your back pocket, you can create an income stream when they do transition to POS that can basically pay you an income for the rest of your life. So, there are two sides to that conversation. The point that I would just make, especially, an asset that doesn't plan to make a switch from POW to POS, if you can find what that cost of production is, I think that represents value. And then, if you want to try and time your purchases, then you can start thinking about hunting setups and W's and all that kind of stuff. So, one name that does jump out to me that I think is trading below cost of production right now, that isn't making a transition like Ethereum right now, is something like a Litecoin. I think on balance, technically, this is changing the conversation now from sort of fundamental, why do I want to invest in something, to technically, is it a good place for me to go in and actually take a risk? Cost of production. That was that one. Are you talking about Litecoin, Colleen? That was that one company, and frankly speaking, that one company, I think they're just doing it wrong. And the simple message to them should be just turn the damn machines off. There's one company in particular that we were following that had a Litecoin cost of production of $100. If I understand correctly, I think this sort of consensus is something around $50-$60. I'm not totally positive on that. I do know that Charlie Lee himself said that he would be willing to buy his Litecoins back at $20. It's interesting how we got down to 22 and change there a while ago. But, if you just throw yourself on a dollar cost averaging plan, not even thinking about timing your purchases on Litecoin, on balance, I think you probably do perfectly fine if you can just think that sort of 3 to 5 year time horizon. As for timing your purchases, I think we, unfortunately for crypto right now, we have to go back to this conversation, right? Now. Where can Brian find the chart that he was having the conversation of? Where was that ES chart that I was looking at? Did I already get rid of it? Darn. Anyway, I thought I had the S&P chart on here. There, 38.2s, all that kind of talk. What do I do with it? Is it way over here? Maybe it's over here. Fudge. I always do this. I swear. I totally derail myself. I'm like right in the middle of a beautiful soliloquy and then, what the hell? I think maybe I must have been back over here. No. Fudge. Oh well. Point I was trying to make there was we were looking at the S&P 500. I just put it on here. That's weird. I totally thought I had it on here. Oh well. ES1 exclamation mark. Remember we did those, we did those 38.2 dead cat bounce kind of conversations. Okay, I thought I had it on here. Oh well, maybe not. Let's try that again. So 38.2, boink. There we are. Right. So if you look at Bitcoin, I think it's actually doing something very similar. I put out, well, there's a 4-hour one. You can see it here. So thump, dead cat bounce, didn't quite get to 50%, which was interesting. That surprised me a little bit. But, you know, if we change this to that one, 38.2, that's backwards. Let's try that again. Reverse. There we go. So 38.2 was in here, got up above, and then ooh. So I think that Bitcoin and crypto is going through its 38.2 test here as well. I know this is extremely busy chart, so sorry about that. Let's put that back, and then we'll go. Whoops, that's not what I wanted. Darn. Okay. What I did find interesting here recently was you can see there seems to be some sort of time sequence that the market is following here. Because notice this is 342 bars, and we take half of that from that peak to this trough. And fascinating that this move here, usually what we would expect is over this 50% of this range here, we would expect a simple 50% retracement. There's the bottom end of the range, there's the top end of the range, 50% retracement. But that's not what happened here. What actually happened was the market lost the entire range and went 150%, almost exactly on the nose, which I was like, holy Shiite Muslim. And you see, there's 150%, and we came right down into that level and stopped on a dime. I mean, that's remarkable. Can you guys see that? I mean, I know James. James is here. He's a big fan of GAN. I don't know whether we can show the ultimate low there. But anyway, that was right on the 150%, or basically 50% of this previous window. 150% hit exactly. So that totally freaked me out. Yeah, I mean, I was just like, oh, you can't be serious. So, and I've never heard a GAN actually talk about time references, but not only the 50% level, but 150% actually in his analysis. Have any of you guys ever seen that before? And was that, was this level right here 50% of exactly the top down to zero? That's what Murat is saying as well. So don't you find that interesting, Murat? There's something about that. Almost, it's exactly 150% of this range was the move down. And you know, was that 50% of that there? I don't know. But that really caught my attention. Something significant happened there. And then also too, like I said, almost exactly 50% time. So then if we sort of zoom that in the next phase, all right, well, so where's 50% of this next phase, right? 50% of that, lo and behold, it was right in here. And remember, we had that CME expiry. And I had sort of said through this window, gee whiz, it sure feels like the market is parked here. There's 50% of that bounce range. I do find it fascinating that they couldn't get the market up into that 50% level. There is that contract expiry parkage. And actually it was interesting because we did a video on Friday, our daily recap video, but we forgot to produce it and we didn't publish it. Oops. So I noticed that it wasn't published this morning, and so I just put it out. So it was kind of interesting. Anybody who watched that Friday video, this was before this event had happened. So Friday's video, the Daily Brief recap, was sort of like right here. And we're kind of like, well, we're still making higher highs and higher lows. So that's good. Because we were making higher highs and higher lows, that did paint bullish objectives up top, and we still had these little chaos levels all floating out here. You can see one was hit. But we simply said that, it sure looks like we're in a range, and I think I had put like a line off of these lows and said, whatever the direction, whatever the resolution of this red candle, and I went and watched the video this morning, and I think that was actually spot on, this was basically a diamond pattern. And so the resolution of the sort of apex of the diamond is your tell. So a loss of this level means that the market has broken down. So sure enough, I think that was correct. We had talked, also too about the Fed's bazooka buy signal, and then bot levels were in here. So this happened to be a move stop to scratch level on the bot setup. So what I also said was if we did lose this level in here, then that'll mean we lose the bot level, and it'll mean, people who did take the Fed bazooka long trade, you probably best to hop off. And you can see, in essence, and this is what pisses me off, because clearly what I see here is that basically the 1%, Goldman Sachs, Joey Diamond. Interesting how we don't ever hear from Joey Diamond anymore, eh? I believe that they've taken over Bitcoin. I do believe that as we were heading into this event, they had a very specific agenda in mind on the expiry. I find it fascinating that expiry happened to coincide perfectly with one of these Gann time sequences. Also, too, there is that 50% rule. I think they got what they wanted, sort of dead cat bounce. As soon as the event's done, they just pulled the floor out from underneath the market. Boom! Down she goes. So I had put out a tweet sort of, yesterday, day before, basically on the resolution of this, on this candle here. I now have a channel operating off of these two highs, which goes back off of this low, which creates this channel. And then because of this double top, I have a channel now working off of this high and this high back to this low or this low, depending on your interpretation of this channel. So we can do a channel off of that low, which pretty much describes price action here. I like this channel off of this low, and I think this is sort of the midpoint fulcrum right here. I mean, they're both valid. But anyway, the point of the matter here is this is basically our trading range. Now, I find it fascinating. Keep in mind this line right here. This is, ironically enough, the actual original double top trend line breakdown. This is actually the trend of this entire correction. Isn't that incredible? And this is why it's so important to me when I teach my education programs that the trend lines have to go off of market structure. It's market structure that actually validates this trend line, and I think that this is actually an extremely valuable trend line for the market right now. So, what a surprise. We are just basically walking along that trend line right now. When we were up top here, the momentum indicators were all saying, oh boy, careful. This move to new highs created divergences. So it really shouldn't surprise. And I think in the public broadcast and stuff, I was like, you know what, be careful here. It might be worth us looking at internals right now, but bottom line here is, we've seen these silly little market structure chaos levels work so well. I don't see any reason why this chaos level shouldn't be traded to. Seems logical to me. Also, too, what I found interesting was there is the next time window. And notice how that corresponds nicely with this channel. It also corresponds really nicely with that channel. Interestingly enough, earlier I was looking at this, and actually, this isn't a bad area for Hogue to start getting interested in from a value perspective at the bottom of the profile. And then, of course, also, too, good old reload zones, right? We could make an argument good old Mountain Man's just sort of sitting there going, here I am, I'm here, look at me, yeah, yeah, yeah. So I like a nice trade down here to, probably a brush underneath 5 grand, big fat psychological level. And of course, wicks and tails like to be eaten. You can see these candle body location, trade location levels right in there. So I don't see any reason why we can't work our way down into here over the next few days. And like I said, all the planetary people and stuff, they really do not like Tuesday, Wednesday. And I don't think we have our big Jupiter, Pluto, Saturn conjunct event until Friday the 5th. So with all that said, I can't see why anything should happen here to break this thinking. There was somebody that was like, dude, why aren't you short, man? That was a wicked top. Hey, you're a shitty trader, man. I'm like, but what I said to him was, if we could get a nice little counter trend rally back up top, and I don't know what the low is. It looks like we made a new lower low here. And we get an RLZ tag of this original range, maybe a brush up against the top of the trend line here. I might just join that short trade. But for now, I'm just cooling my jets. And if anything, what I would prefer to do is wait for these levels. Excuse me. Holy hiccups, Batman. Wait for these levels down in here. So that's sort of what I'm seeing out of the corn. And I think as I've sort of pointed out on these kind of images, you can see there's the green boxes on the corn, there's green boxes on ETH, there's green boxes on Litecoin. This story is almost identical right across the board. And, the irony of it all is basically this is exactly the same image as if I drew green boxes off of stock markets, maybe went down to a 4-hour, right, something like that. It's basically the same thing. So, I'll be watching with bated breath how we do here over this next week. The irony of it all is that I've been sort of bitching and moaning and complaining for like now probably the past few, probably I guess about the past month. Oh, we got to get into the end of March. We got to get through March. We got to get into April. Well, here we finally fucking are. It's about time. So let's see what happens over the next week. It'll be really interesting next week. In fact, one of the reasons why I did the show a little bit later today was that my mother, my stepmother, she called me from back east. And of course, I think I had said earlier, I'm rather worried about them. And I told her, I said, you make a note in your calendar. You make it a point to call me 1 week from today. Because this, once we get on the other side of here, then I think at least the pressure abates a bit. Now, I've heard lots of people say that really all through the month of April, this is just going to be shit show central. So I'm not like, all right, big bull market. But what I want to see is how does the market come back down? Same thing on Bitcoin, Ethereum, Litecoin. Almost all of these risk assets are acting similarly. So let's now see whether this V bottom is actually really a bottom or not. All right. What else can we talk about today? How long have I been blabbing away here for? Probably about an hour or so. All right. I see Marat's over there trying to teach everybody GAN. Good luck. It takes a hell of a lot, eh? Good job. All right. So what's this? Okay. Well, thank you, Marat, for taking the time long enough. Happy Sunday. Haha. Yeah, I love it. Just so you understand how these viruses affect different people differently. Probably if you've been following along, I religiously take my son out and give him a nice, quiet, private time away from the institutional hell that he has to live in. Monday to Friday, I do it 2 days a week. I am absolutely religious about it. And now the only way that I can interact with him now, the bureaucrats have said all outside visits are suspended. And the only way I can visit with my son, who is nonverbal, is through video conferencing. So I'm going to end the broadcast here. I'm going to go get myself pretty for the video broadcast, and that's how I'm going to be spending my afternoon. So we all have to deal with this in our own individual ways. We are all going through our own little individual hells. For those people that are sick, God bless, hang in there. What can you say, right? Words don't express feelings. But also understand too, and this is what I've been sort of going through lately, is trying to see the world from other people's perspectives, and try to be empathetic. As I said earlier, some TRIers have actually done really, really well through this period. Financially. They're sitting on tropical islands drinking Mai Tais right now, laughing at us. Everybody in the lounge knows exactly who I'm talking about. Try to stay humble through this experience, please, everybody. If you are doing well, then maybe just try and be empathetic and just think about other people's plight. I think this is the big reason why JoJo asked me to do this. I don't know if I'm doing a good job or not. All I'm doing is I'm just trying my best. Day in, day out, all I do is try my best. The good part about what we do at TRI is, at the very least, if you have a passion for the market, we'll just slow you down so you don't go and blow yourself up right away, and just give you some time to really see how this capitalist machine works from the inside. If we can help you, awesome. 1 + 1 = 3. I think we do help. I like the idea of doing these free shows on YouTube as sort of a way to try and give back. Don't ask for anything in return. All I'll simply say is, if you do want to take your trading to the next level and you need help from professionals that are doing this correctly, and I fully endorse the work that they're doing in the community, I think TRI is a really, really good place to start your adventure, and also too to undo a lot of the damage that gets done to new people to trading. So consider that. All right, everybody. God bless. Thank you, JoJo, for giving me the opportunity to live up to your hoped for expectations. I hope you guys are seeing that I'm doing what you asked me to try and do. The interesting thing is, she never told me, oh, Brian, do this and you're going to make $1 million. There was never any monetary reference at all in her message. It was, you really have the opportunity to make a positive difference in this world. And ironically enough, I'll probably never actually see what that tangible difference is. It's not like it's a number written on a piece of paper. But my promise to you, JoJo, is I'm going to keep on trying and to do my best. And if I can help, I'm here to help. So, PMA for the win, everybody. All the best, and bye for now.